In today's Bitcoin update, the theme is where and when we expect corrective price action to revert higher. We will discuss liquidity zones and predatory market maker behavior to which we are poised to exploit for our next long setups. If you're new to the channel, our daily updates are short format summaries of our market perspectives and trading strategies. We are a team of investment professionals leveraging decades of experience in traditional finance as traders, market makers, and portfolio managers for top-tier institutions, having transitioned to proprietary traders of digital assets. We have developed a proprietary methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs. Our methodology translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms, with a focus on market structure, liquidity, volatility, and time-price-volume relationships. Please note, our content is not investment advice or is this an educational channel. It is intended for entertainment purposes only. We have no affiliations to exchanges or paid sponsors. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. Corrective price action persists going into the second trading session of the week, with Bitcoin consolidating between 67K and 68K following the rejection at 69.5K just prior to the weekly open. Sentiment has slipped marginally since the prior week as indicated by Crypto Greed and Fear Index, yet still in greed. Volatility markets also show increased caution with rising demand for puts versus calls, as indicated by a tightening call-put ratio. Softer sentiment is partially attributable to renewed anti-crypto rhetoric from European and US central banks. The Federal Reserve of Minneapolis published a study making the case for a ban or tax on Bitcoin as it agitates their ability to run budget deficits, recognizing one of the core tenets in the advent of Bitcoin. This, on the back of the recent increase in capital gains tax from 26% to 42% in Italy, the 9th largest global economy. This also highlights the significance of the upcoming US elections, as Democrats have explicitly stated their intentions to raise capital gains tax, as well as introduce new crypto regulation, to which it's logical not to expect any relaxation from the increasingly left-leaning party. Contradicting weaker sentiment, Bitcoin ETF flows remain net positive and volumes robust for 7 consecutive sessions. Looking forward, the US elections are the predominant foreseeable potential catalysts to trajectory of price with economic data light this week, leaving quarterly earnings the only significant data-driven risks, given Bitcoin's positive correlation to equities. Geopolitical risks also remain ever present, namely escalation in the Middle East conflict. This creates a backdrop for market maker predatory behaviors and liquidity to be interim primary driver of price. This being said, liquidity is concentrated locally between 65.8K to 66.5K and above 69.5K. Zooming out, the largest concentrations of liquidity have accumulated between 61 to 61.5K and 70 to 72K. Translating aforementioned points into investment implications, we remain biased to higher prices, but are currently conservatively positioned in terms of scaling, having reduced our long at our target 69.5K price, highlighted in last week's updates. Bullish market structure remains intact both locally and over long-term intervals, with invalidation levels not within close proximity. Thus, we are looking to increase our long exposure at aforementioned liquidity zones, which we view as high probability inflection, points to current corrective price action, which we see likely to persist into the latter half of the week. Noteworthy, current valuation is trading at a premium relative to the 52K to 72K 6-month premium discount array. Recognizing this in the context of the balance of risks, we have also implemented tail hedges via put options. Also in option space, we expect upcoming event risk to present opportunities to monetize volatility premia. As always, do your own research and analysis. Be safe, and good luck in trading.